Welcome to today's market report.
Global shares markets slid on Thursday as US inflation hit almost 8%, making it almost certain the US Federal Reserve will raise interest rates next week, and the European Central Bank sped up the end of its massive stimulus program. Data showed US consumer inflation running at a 7.9% annualized clip in February, the largest annual increase in 40 years. Wall Street fell on the data because while markets expect the central bank to raise the Fed funds target rate by 25 basis points at the conclusion of next week's monetary policy meeting, the CPI data suggested the FOMC could move more aggressively to curb inflation, as promised by Fed Chair Jerome Powell last week. The ECB earlier in the session said it will stop pumping money into financial markets this summer, paving the way for an increase in interest rates as soaring inflation outweighs concerns about the fallout from Russia's invasion of Ukraine. Talks between Ukraine and Russia on Thursday failed to bring any respite in the conflict, which has trapped hundreds of thousands of civilians in Ukraine's cities, shattering amid Russia air raids and shelling. The euro retreated from the overnight gains following the ECB announcement, and the dollar strengthened on the US inflation report. The benchmark US 10-year Treasury yield rose above 2% for the first time in 2 weeks. Economists reckon inflation can be beneficial to stock prices, but central banks have their work cut out for them, managing inflation that is at multi-decade highs. We've reached out that tipping point between good inflation and bad inflation. It is driving volatility higher, and the higher volatility typically drives away investors, according to Brown from Indigo. MSCI's gauge of stocks across the globe shed 0.19%. The Dow Jones fell 0.34%, S&P fell 0.43%, and Nasdaq dropped 0.95%. The Pan-European Stock 600 index lost 1.69%. The GBP/USD slipped below Wednesday's low and printed a fresh 52-week low at 130.82 on renewed fears of the Russian-Ukraine war. Euro-dollar is trading just below 1.10.
This is today's market news. Thanks for listening. We'll see you next time.